Hello, everyone, and welcome to SASB Advanced, taking the SASB standards to the next level. My name is Joy Meredith, and I'm a Customer Success Manager here at Gobi. The Value Reporting Foundation's SASB standards are quickly becoming an integral part of decision-making and reporting processes globally for investors and companies. The ESG reporting landscape is growing and developing, and investors' attention is gravitating towards the SASB standards. Today's webinar is the second of a two-part series about the SASB standards. In today's session, we will review the SASB standards in the context of a broader market development and the pending ISSB Exposure Drafts and US SEC and European EFRAG disclosure regulation activities, and more. Also, we'll explore resources that companies can access and consider how implementation of SASB standards and identifying what their peers are disclosing, and using the standards as an investors and SASB standard-aligned information during the investment decision-making process. Okay, but before we get started, a few housekeeping items. First, today's webinar is recorded, and the recording and the slides will be distributed to everyone after the session. Second, this webinar should run about 45 minutes or so, and we'll have about 10 minutes or so for questions at the end. So if you have any questions right now or as we are going along, please feel free to put them in the question section of the GoToWebinar control panel. We'll attempt to answer as many questions as possible, but if we run out of time, we'll have somebody on our team get back to you and follow up with your answers after the webinar. Okay, now that we've covered those, let's introduce today's speakers. Nikolai Lunde is the Chief of Marketing Relations or Market Relationships for the Value Reporting Foundation. Nikolai, thanks for being here today. Carlos Solano is the ESG Manager at Gobi. Hey, Carlos. And Kylie Ford is the Principal ESG Consultant at Gobi. Okay, with that, let's get started.
Great. Thanks so much, Joy. It's fantastic to have a chance to connect with the Gobi team and everyone on the webinar. For those who don't know, Gobi has licensed the SASB standards so that they can do so much more than what we do. We just work on establishing the standards, but that only takes you so far. And so all of the organizations out there that provide solutions and actionable insights and data and everything that Gobi is able to do just allows for that much more application. So I'm really here to help provide a little bit of subject matter expertise into the SASB standards and how that's evolving into the ISSB standards, and then we'll leave the Gobi team to talk about everything they do beyond that. So what I wanted to start with is really making it clear what the future is going to look like, what are we building towards, and then reflect on where that is today and a little bit of what immediately comes next. So the future vision is really around a global baseline. And so that we were able to take a really strong step towards that back in November with the announcement of the International Sustainability Standards Board. And so there is a new acronym, ISSB, but it's consolidating several others. And so we're ultimately moving towards that baseline, because the real mission and goal of the ISSB is to continue the focus on the investor community. It's not going to solve all stakeholders' needs, but it's going to help integrate ESG information into the capital markets more effectively, do it on a global basis, and help provide a building block to be able to layer in additional information for stakeholders and additional jurisdictional requirements. So that's really where we're going. And luckily, as I mentioned, we're simplifying the landscape a bit, where TCFD's recommendations and SASB's climate metrics are the ISSB climate standard. In the future, there will be industry-based standards from the ISSB, from the SASB standards, and then the integrated reporting framework is going to provide a connectivity framework for financial reporting and sustainability reporting. So we're not at a simplified future yet, but that's where we're going. And the good news is that it reflects market use today and market signaling. So there's been a lot of institutional investors around the world that have said that they jointly support disclosure with SASB standards and TCFD. So ISSB is leveraging that investor support. and corporate use of these materials from TCFD support, SASB standards reports, and then integrated reporting aligned businesses. So we're building off the investor use and corporate use today, which is really designed to ensure that our hope and goal for a global baseline is achievable. So this is really about the SASB standards and how that's evolving. And so I want to make sure that we're clear on some of the details of the SASB standards. So the SASB standards are designed for investors. My colleague Ryan, who was on the previous webinar in this series with Gobi, talked a little bit about that. And I want to unpack that a little bit more. For many years, the origins of sustainability data was really not geared towards investors. And this is an example from JetBlue, from a report 7 years ago. Throughout the report, they had different comics because they were trying to reach a kind of lay person or customer or a broader stakeholder audience. You wouldn't expect to see comics in an investor-oriented publication because it just wasn't oriented towards that. But a couple years later, as they started using the SASB standards, building in TCFD, and really thinking about how they might communicate with stakeholders differently than investors, you're increasingly seeing, not only from JetBlue, but thousands of organizations, sustainability reporting that looks and feels and is oriented towards investor data needs in a much more typical way. So we're seeing this evolution in the market, and SASB standards are part of that. Because as Ryan talked about, it's really evolved through a standard setting process to identify what investors are most interested in understanding and what is most cost effective for companies. So what I want to do is take you through an example of how that works in practice. So we have here one of the topics in one of the industries, the non-alcoholic beverage industry, where health and nutrition was vetted through a variety of steps in the research process and was found to have strong evidence of investor interest and market support for that, strong evidence that how companies in the non-alcoholic beverages industry like Coke and Pepsi and others, how they manage the health and nutrition profile of their products, that could impact their financial performance. And so those were the different kind of vetting points along the process that validated that this was worth including in the standard. But not every topic in sustainability is like that in every industry. If we stay in that same industry, initially we were researching whether or not both energy management and greenhouse gas emissions would be a relevant issue for understanding enterprise value for these companies. But as we probed deeper with the market, as we looked at current disclosure practices, as we looked at evidence of the financial impact of management of these issues, it really started to migrate our understanding away from both greenhouse gases and energy management to much more focus on fleet fuel consumption and the massive infrastructure that these companies have in distributing their products around the world and the fuel used in that fleet. So, topics evolved based on those points of feedback and where there was evidence of interest and evidence of financial impact. So that orientation around financial impact is really what's made the standards validated and supported by the investor community. So, what does that mean in practice is that there are only 6 topics and 13 metrics for an average industry in the SASB standards. This is what you're looking at is the automobiles industry. It's only 5 topics. It's under 13 metrics and is just a very concise, focused set of information to supplement any reporting that companies are already doing to the investor community. And so this is where, for companies, it's a really straightforward, set of topics and metrics. For investors, one of the huge benefits that we see and hear from them is that the fact that each industry has a different set of sustainability topics, different set of sustainability metrics allows them to build in more sophistication in understanding the key opportunities and risks for a given portfolio company, which varies based on their industry. And this is just an example of two very different industries in biotech and internet media. So when you look at how investors are using the standards to inform investment decision-making processes, you see them licensing the industry framework so that they can build in ESG scoring or ESG and analytical templates or due diligence frameworks or all sorts of other applications to then support the use of this information in decision-making processes, proxy voting, corporate engagement activities, things like that. So that gives you that visibility into where we're starting from today and how this is used by companies and investors. So where's this going? And where can you kind of follow the puck as we look to the future? So even though the ISSB as a new organization is consolidating existing frameworks, TCFD, Integrated Reporting, SASB Standards, when you look at what they've already committed to publicly, there is strong plans to use the SASB standards rather than just recreate them. And so we've seen those statements from the chair of the ISSB, and we've also seen that in terms of what they've outlined publicly around the fact that they will continue to look at how standards can be developed on an industry-specific way. Already, SASB metrics are included in the proposed ISB standards, and the existing research projects that have been going on with the SASB Standards Board will be continuing as research projects into the ISSB. So you're going to see this continuity and continuation in an ongoing basis. And you already have a little bit of a preview of what that's going to look like. So about 3 weeks ago, the ISSB published 2 exposure drafts, proposed standards for public feedback. So what they've done is they said, this is what we think adequate disclosure standards would look like to start with for general sustainability and climate specifically. Now, what they're asking for is, do people agree or disagree? We've put our views out there. We now need to gauge market sentiment. And so digging into the hood of that a little bit, what it means for companies is that what we would be able to start with is guidance from the ISSB that says, first, there are general guidance for sustainability disclosure to cover the range of sustainability risks and opportunities. There are specific sets of guidance for climate, and that is really the TCFD framework with SASB industry-specific metrics layered in. And then for any other sustainability topics where there's not a specific ISSB standard yet, there's guidance to say, look at the SASB standards, which is listed first, look at CDSB, which is also listed as a very useful framework, or other investor-oriented standards and frameworks until you have a complete set of ISSB standards in the market. So this is what they've put out as the structure to guide this transition pathway to a global baseline. When that starts to be reflected in practice, what it means is that if you are in a particular industry, the ISSB proposed general requirements draft says, look at that SASB standard for that industry, determine what topics are relevant to your business. It might be all of them, it might be 90% of them. The standards are set to meet the typical company, but some companies vary within the industry, and they still have decision making around what of those topics are most relevant to them, and then look at the metrics in the SASB standard to disclose for a period of time as that gets evolved into the ISSB standard. So there's these stepping stones and transition pathways, so you don't just one day wake up and there's a whole new set of standards to start with. You actually have existing resources with the SASB standards to make sure that you're on that path. And to really illustrate what that looks like in climate, what you find is that 68 of the SASB industries have climate-related metrics. All of those climate-related metrics appear in the exposure draft for the climate standard under the industry-specific appendix. And so you can already see, if you're like, how much is the SASB standards going to change as they become ISSB standards? You can already see an example of that with how much the climate metrics change in the proposed standard. And the answer is they change very little. Sometimes they change because there's ways to improve them. They're not perfect yet. They'll never be perfect, but they continue to iterate. And so there are incremental changes. You can see with track changes that it's quite limited, and it's designed to improve understanding and clarity. So we're already able to see what can you expect if you're using the SASB standards today, or you're thinking about using them. What is that going to mean as you transition to the ISSB standards? There's already signaling around the continuity and foundation that the SASB standards are providing, and the limited changes that you can expect so far. So a lot of this can feel overwhelming. I get that. You've got so much happening in this space right now, and many sustainability teams just under-resourced. So I want to point out a couple resources that the IFRS Foundation has published that can help you get smart on this a little bit faster. There's a snapshot which digests this into just a few key points, very helpful. There's a comparison between the climate standard and TCFD. You'll see that they're very, very similar, but there are some enhancements. And then there's a comparison. If you looked at the working group documents published in November, then you can see what is similar and different in a comparison between the exposure drafts and those working group prototypes. And then there's some illustrative guidance to help companies get a sense of what this would look like. So that can be really helpful guidance that is downloadable and included in the links in the slides. And if you're thinking about weighing in, I would highly encourage that you take the time between now and July 29th to either fill out the survey or submit a comment letter. The comment letter does not need to answer every single question that's being asked in the consultation. Even if you just pick one or two questions, or you make some points about whether you like the direction of travel or whether you're concerned about the direction of travel, even that level of feedback helps the ISSB gauge, are we on the right track with what we've proposed, or are there concerns in the market? So the last thing that I want to make sure that we cover, which Joy referenced, is that this isn't happening in a vacuum. That US SEC has proposed a climate rule, and then you've got EFRAG in Europe working on this at the same time. So I want to spend just a couple minutes addressing some of the key things to know when it comes to those two regulatory initiatives. One is that even though the ISSB has this significant support in building off standards already in use in the US and other markets, there are some folks who are wondering, is this going to be relevant to me because IFRS accounting standards are not used in the US? Our signals so far from the investor community is that investors invested in US companies, whether they're US-based investors, Canadian investors, French investors, Japanese investors, still see a lot of value with the ISSB standards and the evolution of SASB standards, and they expect to continue asking companies to disclose, almost independent of what might happen from the SEC. So we do expect there to continue to be market demand for this. And when you look at the SEC climate rule, the ISSB proposed standards have more information, but where the information is the same between the SEC and the ISSB, it's really well aligned. The SEC goes a little bit further in some things where they have regulatory authority, like protecting against forward-looking statements and a safe harbor disclosure, but which the IFRS Foundation is just not something that they have the power to do. But when you look at what's actually being disclosed, asked for disclosure, it's very well aligned, which speaks to good room for continued alignment in the future. And when you look at what's going on in Europe, they haven't published their proposed standards yet. Those are expected by the end of April. They will have a consultation period through the end of July, so very similar to the end of July consultation for ISSB. But the most important thing to recognize is that they are really approaching this through the lens of not just investor information, but a broad set of stakeholders as well. So they're going to be more expansive But there are political negotiations going on right now between the European Parliament, European Council, and European Commission that are trying to figure out how closely they want to guide European standards to match or use ISSB standards. We've seen some promising language that will speak to more alignment. It's in negotiation, so who knows where the final text will end up, but there are good signals, including a joint letter from the German Business Association and the French Business Association encouraging very, very close alignment with the ISSB standards. So that harmonization and simplification of the landscape is not quite there, but there's good signaling, even as you see what the US SEC and EFRAG are doing. So what does this all mean, to you if you're preparing reports or if you're an investor trying to engage with companies around preparing sustainability data? Continue using the existing frameworks and standards that the ISSB is drawing on heavily, because you're going to find that that sets you up really nicely once the ISSB standards are finalized. Really encourage you to comment. Again, it doesn't have to be on everything, but making your voice heard, if you agree, particularly if you agree with the direction of travel, means that it can buttress any feedback that might change the direction of travel, and expect to have an opportunity and to set aside resources and time to commit to ISSB standard setting in the future, because we believe that this is the work and the organization that's going to become the global baseline that meets investor needs. So that hopefully gets you that advanced look at the SASB standards and where the market's going in the future. So I'm going to turn it over to Carlos to talk about what that means in the Gobi platform.
Great. Thank you, Nikolai. That was great. It's great to have your partnership and learn from the global developments. So thank you. Just a quick wrap up, like Joy mentioned, this is building on to the first webinar that we did, and just wanted to call your attention on the topic of resources. To sum up some of the takeaways from that last one is using the engagement guide, which also kind of summarizes a lot of the metrics into ready, more kind of friendly language to send out to portfolio companies. So that is a good one. If you do have professionals that are more enthusiastic about the SASB, they have a two-part exam that I highly recommend. So going off on the theme of examples for investors, we have here a private equity company with they're managing $10 billion. These are simple numbers just to go off, make easy calculations, 100 employees, and they're raising funds for this strategy of buying companies in heavy industry between 10 and 30 million in EBITDA. What are we trying to do in this second webinar? Not only collect metrics like we did last time, talking about top-down and bottom-up sourcing of metrics, which is very flexible, but actually improving their performance and integrating into due diligence. Some of the drivers, a lot of times it really helps if the CEO is kind of leading it. Also, a lot of investor DDQs and some regulatory pressure, as we just heard. There's a bit, okay, there it is. So this also kind of summarizes some of the exercise from last time. We're looking at different industries in the extractives and minerals processing sector. So we are only going to pick companies in the oil and gas midstream. Just quick context, upstream is basically exploration and production. Midstream is basically transport. Downstream would be refining and marketing, so kind of end use. And then oil and gas services. These would be companies that would open up roads, fix pipelines, fix leaks, help with the drilling, or help in different parts of that process. And then some disclosure topics, some initial set of disclosure topics. This is not the full list for the sake of simplicity. And we're gonna actually go with water management services and operational safety, which is already mandated by OSHA in some levels. And you will find that in the SASB standards. They're not recreating the wheel, they're already leveraging what is best practice and just kind of simplifying what should be reported. And then finally on the metrics, We're just going to go with the yellow one, total volume of freshwater handling operations, and this is to be measured in cubic meters, and the percentage that is recycled. Okay, so what are we trying to do if we have, just call it 20 companies in our existing portfolio? We want to be able to compare them. So if a company has maybe 20, well, I'll give you some of the activity metrics. We're trying to normalize and see apples to apples, right? So for example, in oil and gas midstream, we will be looking at things like metric tons, kilometers of natural gas infrastructure, crude oil, or refined petroleum products transported by type of transport, whether it's heavy duty trucking, tankers, pipelines, etc. For oil and gas services, we will look at things like the number of rig sites, well sites, total amount of drilling performed in meters, and number of hours worked by all employees. Some initial just pointers on how to improve would be to set appropriate baselines when you're collecting this information. So maybe you have a region, a specific set of companies that are already tracking this well or is already mandated to track it. Maybe just make that your baseline across the portfolio. Engage them on improvement plans and set realistic timelines, and communicate consequences for non-performance. We're starting to see this more and more, not quite yet in the US, but if you do have maybe sovereign funds, they are starting to ask more questions around consequences. So just to keep that in mind, again, it's more of a summary from the last webinar, but they're relevant for today's conversation. So how do we compare these companies? Let's say you have A, B, C companies. The first one is reporting 500,000 of freshwater use, cubic meters. The second one is 1.5 million, and the third one is 3 million. So looking at the total, that figure is not really helping us unless we understand what is behind that use. So the activity metrics, we have well sites of 20, 50, and 150, rig sites of 5, 10, and 40, drilling in meters of 10, 25, and 80,000, and the number of hours worked are also very different. So from an initial impression, it's not that easy to tell who is the highest performer and what baseline should we set. How do we engage them on improvement plans? So for that, we will simply divide them, normalize them, and we will see that company A uses 25,000 cubic meters per well site compared to 30,000 for company B and 20,000 for company C. Again, down the list, the numbers look better towards company C and worse on company B, and A seems like it's maybe in between those two. So if you're creating a process either in due diligence or existing portfolio companies, this is helpful to see. How do we do this? You want to ask the right questions, align goals and set expectations, communicate not just KPIs by KPNs, so key performance narratives effectively. What is your goal for this improvement plan? And screen out low performers and before moving ahead with before dispersing funds towards a specific company. And then also consider the power that you're giving the due diligence team. If they only have maybe an opinion piece on the investment committee, or if they have all the way up to maybe some veto power, or just kind of slide the weight of the power that they're given and have an executive sponsor in that due diligence process. So these are some ideas. I hope this is helpful. I'll pass it on to Kylie for more insights on communication.
Yeah, absolutely. Thank you, Carlos. So as Carlos had indicated last time, or rather the last webinar that we had covered the basics of SASB. So I really wanted to dig in a little bit more to how to get the most value for your company out of SASB standards, I think one of the most misunderstood elements is that these are actually quite malleable and flexible to what your needs are as an individual company. I guess the title of the slide you're looking at right now, how to make SASB disclosures meaningful, is a little misleading. I think they already inherently are, but how to extract even the most meaning, make it relevant to your company, and understand exactly what it is you're hoping to accomplish by these disclosures rather than just going through a check the box exercise. Right here, you're looking at some blurbs just pulled right out of SASB standards that you can download right now off the website. And a few elements to understand is that it's a minimum set of sustainability issues most likely to impact operating performance. So certainly when we get into industries, as Carlos was just talking through, there's going to be complexities in, are these sustainability issues the most material for you, your company's arrangement? Are all of these disclosure standards going to be recommended and actually help you understand the tie between ESG and your own financial scape? Or could you maybe pull in some other factors as well? The goal of SASB standards, as Nikolai was discussing earlier, is to enhance the communications on corporate performance, particularly among investors. This is the direction that we're seeing the market move in. We understand that there is a value in this communication, but ultimately it's a tool for you to be able to really state your case in this world, as well as the use of SASB is completely voluntary. You are not going to get a SASB grade for going through the exercise of completing SASB standards. So what is relevant to you? Which disclosure topics are material, and what metrics should you report on? The answer is not always just clear cut, you downloaded your standard based on industry, but you might want to pull in other elements, especially if there are particular topics that are important to your company, whether culturally or in a unique arrangement, however it might be. So to talk through this in a little bit more depth, you might want to ask yourself some questions, and these are probably just generally good questions to be asking yourself anyway when it comes to sustainability reporting. What ESG topics are internally or culturally important for your organization? So for instance, is there a particular element that a lot of employees are really gravitating towards, that they want to see movement on? Even if these are not necessarily determined, with SASB aligning to your industry, it could still have quite an impact on employee satisfaction, retention, and attraction. Are there ESG topics that key external stakeholders ask you about, even if those are not completely aligned to the SASB recommended disclosures for you? Sometimes external stakeholders, not just investors, but people within your supply chain as well too, clients certainly, might have a little bit of a different focal point. So it could be that they have a focal point on something that's not very materially relevant to you, but at least being able to explore that, being able to explain, here's why we don't collect this data, and having that as a consideration within your standard disclosures are something to consider. So again, clients and customers, is there a preference towards what information you make available? Sometimes this isn't even, they need to know the actual number, but can they get it if they wanted to understand it? So that's again, just part of putting together that report. And finally, are there regulatory concerns over ESG topics that might otherwise not come to the forefront? Could you see the sector moving in a certain direction where you need to be considering these regulatory concerns? And we'll be getting into, I think everyone's been a little bit panicked about the SEC memo, for instance, on climate change. Is this a regulatory concern that is material for you that you should be exploring? Even if not, but there's some ambiguity, how might you integrate that? So these are just general questions to think through and understand that it's a little more choose your own adventure than you might be realizing as well. So let's take a look at an example. Here's the Real Estate Sustainability Accounting Standard. And what's included in the overall sustainability topics are exactly what you'd expect for anything dealing with the built environment. There's energy management, water management, climate change adaptation, and the management of tenant sustainability impacts, meaning green leases, sub-meterings, areas where you don't have control, but you would want to understand that environmental impact as well too. And of course, the SASB disclosures do an excellent job of breaking down what are those specific metrics, how do you think about that in a structured way, and what are the qualitative and quantitative components. What's not included, at least not explicitly as its own topics, would be metrics that fall into the line of diversity, equity, and inclusion, community impact, for instance, affordable housing metrics, items like that, or even looking at things like your property's effect on the surrounding community, maybe for something like, average salary by the zip code that you're located in. Supply chain management, things like procurement, for instance. Building health and wellness. This is probably something that could get folded in with the hyper focus that we've had on this, particularly from 2020 on. But for now, that's not as part of the list of standards. And industry disclosure participation, just the act of maybe participating in GRESB or something similar. Now, that's not to say this SASB standard is sorely lacking at all, because when it comes to financial materiality, what is included with energy, water management, tenant management, and climate change adaptation are what's going to be the most likely to impact what you have in terms of valuation and moving forward. But in general, what we find is that a lot of real estate firms are going to be looking more and more at some of those elements on the right. They might be part of a strategic plan. Maybe they really want to get their arms around supply chain management and scope 3 emissions, for instance. Maybe there's a lot of drive for diversity, equity, and inclusion internally within the company, or at least this is something that they want to be collecting and disclosing on. Industry disclosure participation, just being a part of some of these frameworks, including SASB, which this is aligned to. All of these can be quite relevant, even if not necessarily likely to impact the bottom line broadly of the industry, could have a large influence, particularly where stakeholders have the interest surrounding this. So you could certainly be looking within other SASB metrics and other standards where these are the types of elements included. They do an excellent job listing out exactly what kind of metrics you would want to be looking at in these different topic areas and folding that in. It doesn't have to be all or nothing. Again, if you have just a standalone report of SASB disclosure standards, that's more than fine. But let's say you're integrating this into a CSR report, you can have the items from the column on the right to be supplementing the information on the left and have a more holistic view just in terms of what you're finding to be important and material. Another example, this is, for instance, showing the accounting metrics listed within the SASB software and IT standards. And this is just, there's more under this, but the two topics that are first listed are the environmental footprint of hardware infrastructure, data privacy, and freedom of information. And you can see, again, this is why I say it's a great job, because you're able to see exactly what units of measurement to be collected on, whether it's quantitative or qualitative. If you scroll down even further in the standards, it really lists out the methodology behind how to get at this, what you're trying to glean from it. So it's pretty clear cut and a really great roadmap for you to be able to understand what you need. The reason I pointed this out, however, though, is there's many IT service companies that do not have their own hardware infrastructure. So they're not running data centers, for instance. Maybe environmental footprint would be less material if things are more cloud-based, whereas data privacy and freedom of expression, certainly user information being protected, that's going to be broadly applicable. So if you're looking at some of these metrics and you think, gosh, this just really doesn't affect me, this is not part of my business, that's okay. SASB exists to, again, to give the overarching of what could be included within the industry, but it's not to say you have to pick every single one of them. You could look into your environmental footprint. It's not going to ever hurt you to kind of dig more and get more metrics, but you might just understand, for me, this is less of a piece of the pie. Water withdrawal's not going to be something that we need to focus on. It's not something our investors are going to ask about, but we really do want to understand our monetary losses about legal proceedings surrounding that data security. So let's talk about GHG inventories, for instance, an activity metric that comes up in a lot of SASB standards. And I think this is what a lot of people would likely want to be integrating now if it is not already recommended in the SASB standard. Why? Because especially in light of the SEC saying there's going to be a focus on climate risk, people want to get their arms around their GHG inventory, their greenhouse gas inventory. So what this is a very high level understanding of what is part of your full carbon footprint as a company. And there are direct carbon footprints or direct emissions rather that come from fully operated facilities that you have, owned company vehicles, the things that you can control. Basically, if you are in a building and you are able to switch the type of fuel that's being utilized to power that building in any way. You have control over how it's emitting and how these greenhouse gases are released. Same with your company vehicles. You choose how much they are driven. You choose how much you are fueling up. You choose whether you fuel up with traditional gasoline or electricity, for instance. Scope 2, this is purchased electricity. It's a very technical kind of separation between scope 1 and scope 2. Essentially, you're not creating the electricity on site, you're buying it from a power plant and it's getting transmitted to you, so that's why it's indirect in that way, but you still have direct control over how much electricity you're consuming. And then scope 3 is everything in your supply chain, upstream and downstream. Why are we going through this exercise of talking about greenhouse gas inventories is because for a lot of companies that want to begin looking at this, your big impacts for emissions really are scope 3. They are indirect, they're in your supply chain. And it's not to say that you shouldn't begin folding in greenhouse gas emissions as an activity metric within your SASB standards, but just be mindful about how much control you have over it. For instance, if you're setting net zero targets, but really you don't have much in your direct control, that's going to require a lot of supply chain engagement, a lot of thoughtful entry into contracts when it comes to landlords, when it comes to where you're purchasing from, so on and so forth. So just be sure you're really understanding the parameters of these activity metrics before determining if they're material to you. I think especially in light of where regulation is headed, it's definitely a good exercise to begin thinking through, but it's not to say that any SASB standard is lacking should greenhouse gas emissions not be included as part of that. There's likely a good reason why that's not the case. Continuing on that note too, we talk a lot about climate risk in general. Nikolai had mentioned sort of TCFD alignment as well too, and of course certainly the climate exposure draft that is in the works is going to be changing things in the future. In fact, we're likely going to see a lot of consolidation when it comes to disclosures around climate reporting in the future, but TCFD integration is something to consider within your SASB disclosures for right now. There is still this excellent, I believe it's called the Joint Implementation Guide for TCFD and SASB disclosures. That's actually what this picture is right out of, kind of showing how TCFD can serve as a nice building block underneath what your SASB standards would be, so that you have a more holistic view of what's financially material as well as financially material climate related, if that makes sense. So it goes through the process of really examining your climate risk. It supplements well, and it reads together as a cohesive report as well too. So if you are really worried about climate risk, rather than necessarily jumping into the nitty gritties of the greenhouse gas inventory, summing up your emissions and committing to net zero by 2050 without context, you might want to instead begin here. Think about how you are thinking through climate risk within your full organization, and how maybe some of these disclosures can help prompt those conversations that could end in an annual GHG report. It could end in net zero targets, but certainly you'd want to start with a little bit more thoughtful step forward. The last piece I want to mention, this comes right out of BlackRock's 2020 Sustainability Disclosure Report aligned to SASB standards, is to show that, I said last time, really use graphics whenever you have them to supplement what you're talking about. So for instance, with SASB, diversity representation is something that BlackRock would want to report on within the asset management SASB standards, but you can see that this is really contextualized. The table presented breaks things down neatly, shows trends over time, shows breakdowns even beyond what's necessary, percentage of new hires as well too. And this is the kind of information that you want to think about. Give your investors context. Where you have trend data is always preferred. This is probably just me with my engineering background speaking, but more data points are always helpful just to set the tone. However, just think through what you have that could supplement this information. I've seen far too many SASB disclosures live only in the appendix of a CSR report, and that's definitely a way to go through the exercise, but is that creating value rather than maybe integrating this into the fuller body of the report and providing more context where you possibly can? So this is one example. I actually think BlackRock is due for their 2021 sustainability report to be released any day now. So definitely keep an eye on that. They have great visuals that help supplement as well. And in general, this is just something to keep in mind when it comes to putting together these disclosures and making them more accessible, as well as giving you the most meaning out of them. So that's about all I had to cover today. Joy, I'll turn it back over to you, and especially we would love to hear if there's any questions.
Thanks, guys. I do have a couple of questions that came in, but if anybody has any that are in the audience, please feel free to put them in the questions box and we'll get to them. All right, so if, I think you guys kind of touched on this, but if there's some more examples you can give between the synergy of the SASB standards and other industry reporting frameworks, and maybe just an example or two of, you have the good graphic, but if we can talk through a couple of those, that would be probably helpful.
Nicola, I think that might be your expertise.
Sure. So I can at least talk about it.
How else you pick it up?
Yeah. I can at least talk about it from how we approach it, and then Kylie or Carlos or Joy, you might have perspective from specific clients and in specific industries where I don't have as much detail. So we find that industry-led initiatives have often been really helpful for organizing, clarifying, and refining the SASB standards, and we use it as a way to help with dialogue with a caveat when there's kind of industry-led initiatives that are focused on legitimately responding to investor information needs and balancing corporate interests. We have seen some investor-led initiatives that are just focused on trying to make companies look good, and then we just don't find it as helpful. And secondly, where some industry-led initiatives are focused on enterprise value and not necessarily the broader stakeholder community, then we have found really good collaboration with them. The most recent example of that is in the mining and coal industries, where after the tailings waste dam collapse in, I think it was Brazil a few years ago, the industry organized an effort to enhance and refine how they might measure and disclose information related to that. And we were able to build that in, and they worked with investors in doing that, and we were able to build that in. And when we updated those standards in December, it reflected that work that the industry had done. So it can be a really effective and good way for us to continue to refine the standards, but there's probably some criteria to make it successful. But I'm happy to have anybody else from the Gobi team elaborate if you have other examples.
Yeah, no, I think that broadly speaks to it. My mind instantly went to GRESB just probably because of the real estate example I just given. I think something like 50% of the disclosure recommended by SASB are present on the GRESB survey. So you're going to see a lot of overlap because ultimately you are orienting this around impact, and what is likely to be financially impactful to an industry is also likely to be part of these industry standards. A lot of industry standards can just go a little bit deeper when it comes to benchmarking in particular and having some sort of gauge of how you're falling in among your peer groups. I would also, I don't know, we probably need to hold out to see what UNPRI fully comes up with in June, but I would be interested to see how aligned with SASB any of the new reporting requirements are as well on that front.
Okay, so if let's say somebody's watching this webinar and they're like, okay, yes, I want to get involved and I want to start using the SASB standards. Are they gonna, be better off to start now, or should they wait for the ISSB standards? Like, what's the timing wise that you would recommend? And kind of another question that came in that's kind of similar is that if they haven't been using the SASB standards to the best of their ability, is it worth it doing them at all or starting over? Or just give me some direction on if they haven't started anything at all, where they should start and kind of, at what level should they be concerned about switching over?
Yeah, great question. Everybody's so busy, you don't want to invest in something and then have to redo it, right? The top line message is get started and get started with the SASB standards. And there's a couple of reasons why I say that. One is that nobody's able to find the right experts internally, develop the right data collection systems, develop the right reporting to management and the board, everything that it takes to really get to a point where you have confidence in what you're putting out there if you're disclosing it publicly. Some, private listed companies, they're just reporting to GPs or others, which is fine. You still probably want some degree of confidence in that data too. So the earlier you get started on a pathway, and even if you only collect some of the metrics and say we're not prepared to disclose everything yet, we've seen a number of companies do that and not get penalized for it. So that's one. It's just like it builds your internal capacity. But the second thing is that what we're already seeing from the ISSB is such a close use of the SASB standards that it's not going to be dramatically reworking systems, dramatically re-educating your staff, things like that. It's going to be incremental and value add where the SASB standards might have room for more clarity, and something that we've already been working on to improving, and we're able to transition that to the ISSB working on improving. So you can expect that based on what we're already seeing and demonstrated practice, the SASB standards are going to live on in significantly the exact same way as they currently are, and then any refinements are very much on the edges. So those are the two reasons I would say just get started.
So start with your SASB as your foundation, and any tweaks that you do along the way, it's better than not starting at all. I know that Kylie says it a lot, just get started to start taking in some of the data and get familiar.
You need to know what you don't know before you can move forward mindfully.
Yeah.
Great. Okay.
Another two keywords would be you want to be more proactive than reactive. So again, just building on that institutional knowledge, it takes time, and you want to set expectations with portfolio companies. They also may have a strong reaction, so you want to give them leeway to find also their own resources to get you this data. So yeah. Just building on that.
And for Carlos' example, talking about private equity specifically, are the ISSB standards relevant for private companies if they're not going to be making the information necessarily public?
Yeah, great question. So the beauty of accounting standards for financial information is that they're used by both private and public companies, even if not all the information is publicly disclosed. And what that means is that you have training of staff so that it doesn't matter if they work for a public or private company, they have the same understanding of the data. Consultants know how to use the same information. Assurance providers know how to use the same information. Ratings providers can provide the same sort of benchmark, right? There's this huge benefit to accounting standards that even if not all the information is disclosed publicly, they're used by both private and public companies because it creates this broad market understanding and everyone's speaking the same language and you don't have to get everyone up to speed. So will that play out exactly the same way with sustainability accounting standards? I think it's, I can't tell the future, but I think it's likely yes. And there's a number of reasons for that. I don't want to belabor it too much, but I think that you're already seeing a coalition of GPs and LPs focus on improving data for benchmarking and getting more data from portfolio companies. They're starting small and they're starting with just a handful of metrics and they're trying to apply it to every company. But we do know, and it's called the ESG Data Convergence Project, and we do know that as they're looking at next steps, they've already been very closely working with us and looking at how they might get more sophisticated over time. But again, just like companies have to start somewhere, LPs and GPs have to feel like they're starting somewhere and starting small. So I don't know over what time frame this will play out, but I do think that it's reasonable to expect that you would have public and private companies all working from the same standards.
Okay, and then will you talk a little bit about the nature of is it mandatory, is it voluntary? Could you talk a little bit about some, the strictness of disclosure?
Yes. So wherever the SEC lands, that's obviously going to be mandatory.
Yeah.
Expect lawsuits and evolution, and I don't know. We'll see where it goes. Other markets also pursuing mandatory disclosure. When you look at the ISSB standards, the IFRS Foundation has a track record where they went from 0 companies using IFRS or 0 countries using IFRS accounting standards to 140 plus, where it's regulated in law. They already have relationships with those regulators. There's already been signaling from the Global Association of Securities Regulators, just like you have a mining association, you have a Securities Regulators Association, and it's called IOSCO. And they have said that they are looking at the ISSB standards, they're road testing them, and as long as they meet the criteria that they expect, they're going to recommend to securities regulators around the world to start looking at requiring disclosure. Now, is that going to happen in the US? Almost certainly not, definitely not in the next few years. It's just not going to happen. But that's where you also can expect to see that as other markets start to disclose this, investors are going to get used to this information and probably apply that same sort of expectation to US companies. So it'll play out over the next few years, but I do think that there is a lot of signaling that this is probably going to become mandatory in the future.
Yeah, we have, just to add to that, I follow the Latin American markets more closely, and Chile and Colombia are the first to actually mandate SASB, and there's a big focus on gatekeepers, so the auditors, the accountants, and they're starting, it's also in phases, right? So it's starting with high emitters, so it's very interesting to see.
Yeah, I'm glad you brought that up, Carlos. Just one reference to this is that when they passed that legislation, they said SASB and any standards that might evolve from that. And they were very clearly referencing this. All part of the trend.
All right. All right. Well, I think that's a good note to end on. And, you know, I'm sure there'll be, once these all gets a little bit more formalized in the months to come and the years to come, we'll come back with more information. So thanks so much, Nikolai, for joining us, and Kylie and Carlos, as always. That concludes today's webinar. Thank you so much for joining us today. And if you have any questions, you can always feel free to send them to us directly at Gobi, or I'm sure Nikolai is happy to you know, have you check out their website as well. So please don't hesitate to reach out to us at any time. And thank you so much for joining us today. Take care.